Hello, Oracles. So we've got Amazon earnings today. They didn't beat earnings, but the stock popped. I'm guessing it's most likely because we had such a massive sell-off after Facebook/Meta earnings yesterday that the market was like, you know what, they were close enough. And so as of the time of this recording, the stock is up 5% after hours, and the entire market looks like it's also climbing with it. Now, you have to remember that when a stock like Amazon, it goes up, ETFs that it is included in also go up. And that because all the ETFs go up, all the other stocks that are in those ETFs will also go up. Same reason why a lot of them went down today with Facebook. So that's why these giants who have their earnings can move the market quite a bit over the course of a day. So we saw, the NASDAQ was down almost 4%, while Facebook was down 26%. And so now we've got Amazon up 5%, and the stock market is coming with it. So we'll see how this plays out going into tomorrow to see how it carries. Now, one thing to make note of is just over $11 billion of their $14 billion in profits came from Rivian. So you got to take that into account. But even with that, they still beat their EPS estimates. And the market also cheered them raising their prices on Prime by $20. Now, we take a look at this and say, yeah, hey, that's great that they're going to make more money. But think about it, that's still another inflationary piece of the puzzle that is coming out now. So now their pricing alone for Prime has gone up over 15%. So that's more inflationary pressures that we're going to see going forward. Now, speaking of that, we have our CPI data coming out next Thursday. So I'm hoping that perhaps with the little boost that we got from Amazon today, hoping maybe we see a 3-day rally at least before we get some potential CPI FUD coming in. Now, CPI, we're expecting a higher read on inflation again, but if we come in below expectations, that could be a great sign and give us a longer and more extended rally. And now we won't know that until next week, so until then we will just monitor how the market trades tomorrow. It's Friday. Will we get a Friday fade or will we rally? We will see how tomorrow plays out. So let's discuss Google. So Google, as we all know, smashed their earnings, did an amazing job. They announced a stock split 20-1, still subject to shareholder votes, and this will take place on July 1st for anybody who has that stock, and then it will split on July 15th. And with Google, there's 5 months between now and the split date. So there's definitely not going to be a run-up starting now going into the split. So if it does get approved, I'm guessing it'll probably be mid-June that it'll start to run up into the potential split so that people will have the shares on hand to be able to do this. Plus, we've got to get through the Fed raising rates in March. We've got a Fed meeting. There's a lot of uncertainty between now and then. So for me, I'm going to dollar cost average into Google over the next 5 months to build my position because I don't know what's going to happen. And then I'm going to take a look at the end of May and see where the pricing is at to determine if I want to invest a little bit heavier going into a potential run up into the split. What I will most likely end up doing is selling out Amazon tomorrow after this pop that they've had. And then I'm going to take that and just leave that money as a cash reserve so that when we get to the end of May with Google, I will be able to invest more heavily into that going into the run up into the split. And now to dive into the numbers a little bit further on Google, to get specific, they nearly doubled their net profit and their operating income. That's insane for a company as large as they are. They went from 40 billion to 76 billion, and that's just year over year. So when you look at a company like Tesla and people are like, oh, well, how can they continue this 50% growth every year? Well, you look at like Google, and Google is doing it right now. Sure, it's a different, business that they're in, but it's still, Google is an ad revenue and it's considered a tech giant. And that's realistically what Tesla is tech and software. So it is a potential and a possibility. And so if anybody has the argument of it can't be done because nobody's done it before, Google just did it. Google is doing it. And I can see them doing very well going forward. You think about brand recognition. This is something we discussed on this morning's video. You're like, hey, I need to search the internet for something. What do you say? I'm going to Google it. You literally use the brand name as the product that they are providing. like Kleenex, Skillsaw, Coke. These things that you say are like people just know what the product is because of the brand name that it is synonymous with. And then Google also has the benefit of having YouTube. And YouTube is unlike any of the other social media platforms that are out there. While yes, you can watch videos on them, YouTube is more like its own television sort of thing. You can go watch how-to videos on there, and there's a lot of these videos that are created on YouTube that get shared on the other platforms. So it's kind of its own unique platform, and they get a lot of advertising revenue coming in due to YouTube. Probably the best investment that they have made in their entire history. And those of us as content creators have noticed that the pay has come down a little bit due to the inflationary pressures that Google said it is facing. So even a tech giant like Google is not immune to the inflationary pressures that are out there. But what's great about this is the platform's not going to go away. So these people are going to just continue creating their content. And as we get through the inflationary issues, as we get through rates going up, we will come out of this, and then we will be able to see these rates going back up for ad revenue in YouTube. And once those start going back up, that will be a huge sign that we are coming out of this in a healthy manner, and then YouTube will continue to grow their profits and grow their revenues. And so what I like about Google long term is they have proven that they can increase their revenues significantly, they can increase their profits significantly, they have YouTube as a platform to fall back on, they are a search engine that is the default for almost everyone on the planet to use, so they're not going anywhere. And with the stock split, they may potentially get added to the Dow, which could in turn help them grow even more, because any funds that are out there that are invested in the Dow will now have Google included with it, and that'll help stabilize the stock even more. So it's one of the FANG stocks. It is going to be a stable stock going forward, and it will become one of my long-term cash plays, similar to how I have Apple. So I will continue to add into this one, build it up over time, and it may be one of these stocks where, hey, if I see some dips in Tesla or some other opportunities in a momentum swing, I may pull money out, put it into one of those stocks, get some profits, and then put it back into Google. And so the price action I think we may see over the next 5 months is going to be similar to everything else in the macro environment, a bit of a roller coaster ride. We may see a little bit of a rally in the short term, and then once we hit February into March, we'll see another little bit of a sell-off going into the first interest rates going up in the Fed meeting. And then once we get some clarity on that, we may see a little bit more of a rally. And then for Google specific, I do think come June, mid-June, we will start to see that rally going into the stock split. And you have to remember, a company is only going to announce a stock split when they feel very comfortable and strong about their future going forward. And Google is doing this despite the headwinds that we have in the macro environment. So they see this doing really well. So I think that's why, again, they timed it after the Fed meeting. But this is an extremely bullish sign. And the reasons that they said that they are doing the stock split is despite the fact that they know that there's fractional trading more readily available out there, they still want to recognize that it is going to be making it more accessible to investors. So they're still going to do this. And as we talked before, this is another discussion we have had about Tesla's stock. And people are saying that's not the reason. Well, Google literally said this is the reason that they are doing it. Let me know in the comments below. Are you going to be investing into Google as it goes into the stock split? Are you already an investor? Or are you just all in on Tesla and you're not going to worry about Google whatsoever? Thank you all so much for being here. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. Otherwise, thank you so much. Have a great one.